Hey all, welcome to ShareTrack. This is Raj here. And friends, today what I want to do is to have a look at all the results that have come in for the index influencing companies that we track. These are basically tech majors who gave great results. I'm also going to look at how recent they had the all-time high for 2023, for the year 2023. So I shouldn't use the term all-time high, but I would rather say the highest price that their stock has been in 2023, trying to see how recent it was, because that will give us an idea of the strength, whether the strength is current or the strength was there at the beginning of the year and it is tapering off. So that's one thing I have done. The other thing I have done is I've taken the list of all our genomic companies which we are tracking and compiled the results against expectations and also future earnings that are yet to come and what are the expectations out there. And there also I have tried to track their high for 2023 and how recent it has been. I'll share those results with you. And I've then gone ahead and looked at macroeconomic indicators and global indicators to try and get a feel of how strong this inflation beast is and how strong the employment is in the G7 economies and where we are, and therefore what is likely to happen in the next 2 quarters, that is Q3 and Q4, and how we should prepare for it and where the growth is likely to be along the globe. So with that in mind, I've created this video, so please watch till the end and also let me know your reactions once you're done in the comment section. So let's get started. Well, here we are in my spreadsheet, and let's first look at the lower portion of the spreadsheet. And here you would see that we have all the tech majors, Microsoft, Apple, Meta, Amazon, Google, IBM, and Netflix. So these most of these companies have reported in July and some reported early August. So there are just 2 companies which reported early August, that was Apple and Amazon. And you would see that almost all of them bet the revenue estimates, so EPS estimates. So that was excellent, and most of them were able to beat the revenue estimates as well. And the miss was very minor, and that too it was for IBM and Netflix. That too minus 0.01% is the variance, which is very low. And if you notice, I have got these cross marks out here in the last column. That is to indicate that all of these companies have had their highs for 2023 somewhere in the last 30 to 40 days at the most, which means that these companies, most of them had potential, a lot of momentum, and they had been doing very well. And of course, when there's a good result, immediately there's a run up in price, and then there is profit taking and the price falls a little, and then it stabilizes and then moves up again. So that could be the trajectory on which these companies are at first glance. And then if you look at the genomics companies, we have had results from PACB, Editas, Allogene, and Intelia so far. And when it comes to the variance for EPS, 3 of them were able to come up with a positive variance, which means they performed better than expected when it came to EPS. Only Intelia was negative in terms of earnings. And when it comes to revenue, you would see that except for Editas, which had a negative variance, everyone else was positive, which means from a revenue perspective, most of them did better than expected. But as I mentioned before, none of these companies have a steady revenue stream. Therefore, predicting revenue is very difficult. So I wouldn't put much stock on that overall. But if you look at their all-time high if you look at their high for 2023, and which was more recent, I think PACB shows a great deal of strength because their high was very recent in the last 30 to 40 days. Likewise for Intelia and for DNA and Caribou Biosciences. These are the 4 companies which have got momentum at this point of time for whatever reason. But now, having seen the snapshot of what we have here, we can realize that we still have a lot more of genomic results to come through. We have, I think, almost 75% of the watch list that we have yet to report. So once they start reporting, we'll have a better picture of the performance. But among these, I think I'm still bullish about Bluebird, PACB, CRISPR Therapeutics, DNA. These are the companies on which I'm more bullish. That is a good opportunity for Illumina if it could stage a turnaround, because there could be a lot of money to be gained. It's still a good company, but we need to hear some good news from there. So those are the companies I'm bullish on. But now I would like to turn to some analysis. It is quite possible that the tech majors are the juggernauts which are being pushed forward at their own momentum. They might probably slow down in Q4. And if that happens, I wouldn't worry too much about the tech majors, because what they would do is they will have a series of layoffs, and they will use their cash-rich balance sheet to buy back shares. And those who have invested in those tech majors, I don't think they would have much problem. And they also have pretty good revenue streams, and they have the ability to manage their cost as well as the price of their products. And I think they should do fine. But we'll have to see the entire global scenario in order to come to that conclusion. And what is distorting the picture when it comes to the momentum for the tech majors is the fact that there is this hype around AI. And AI has attracted a lot of funding and a lot of employment. And that is giving a lot of strength to the tech majors, and it becomes an island of prosperity and island of high momentum as compared to the rest of the index. So whenever that kind of a thing happens, it becomes a little dicey, especially for retail investors, because we don't have access to all the information that big investors have. So that said, I would like to say that I'm not that optimistic about the next 2 quarters because of some macro factors. So let us take a look at those macro factors. Here I'm going to show you the picture of inflation in G7 countries. I found this chart in statista.com. And as you can see here, UK has the highest level of food inflation. And that is followed by I think France, which is the next one, and then Germany. So these are the 3 countries which are facing the highest food inflation. And when it comes to energy inflation, I think US, Canada, Japan, and G7 generally are having a respite at this point of time. But if OPEC was to cut the oil production, and if the Russia-Ukraine war was to become even more disruptive, then all these bars might turn to be on the other side, and it could probably fuel the inflation further and feed into other commodities as well, because fuel is used for transporting food and everything else. And if you look at all items less food and energy, which is this light mauve color, and you will find that the leading country out there is UK, which is facing the maximum for other items less food and energy. And a close second happens to be our G7 average. So overall, I think US, Canada, Japan, they seem to be in much better position from an inflation perspective. US especially is doing very well right now. And if this continues, US has the potential to lead the rest of the world out of this economic morass that we are facing. But at this point of time, things are looking very bleak for UK. Germany, which is the driving force behind EU, and France as well. So Italy, Germany, France, all 3 of them are looking weak. Of course, UK is no longer part of Euro, but by itself, UK is also looking significantly weak. So I think that's going to create a bit of a problem for us for the next 2 quarters, which is part of the reason why I'm a bit pessimistic. Now, what happens when there is high inflation in most of these countries? The inflation is still not within the band that the central bank wants it to be. They want it to be between 2 to 3% at the most. And most of these countries have got above 4% inflation. So that is going to be a continuous ratcheting up of the inflation rates. And the goal of raising interest rate is typically to curb consumption. And when consumption is curbed, what happens is that the manufacturers find that they have more production capacity than it is being demanded. Therefore, they have to discount their product and sell. And as a result of which, what they would do is they'll start cutting down their production capacity, which also involves laying off workers. So you expect the unemployment rate to go up, and you expect the employment rate to come down. So as unemployment rate goes up, people have less money to spend. So it becomes a downward spiral of less and less purchasing capacity, as a result of which the economy starts cooling. And when it has two negative GDPs, then technically it becomes a recession. So central banks are going to keep on pushing. But when the interest rates are hiked, the result is not immediate. It's like a huge ship. The global economy is like a huge ship which is being stirred around. So it takes a little while for all the efforts to show results, and the lag time could be anywhere between 6 months to 8 months. So we are going to start seeing the cumulative effect of all the interest rate hikes that have happened in the last 6 months. We're going to feel that now. So that makes it difficult for the central bankers also to estimate when to stop the rate hikes, because part of the psychology is when the central bank stops rate hikes and signals stop in rate hike, immediately there is animal spirits in the market and things start going up. And therefore the central banks also have a very difficult task at their hand. But suffice to say that the overall indication is more and more increase in interest rates. And when increase in interest rates continues, we will see reduction in employment. And that's because demand is falling and production seems to be higher than what is demanded. And it's a self-fulfilling downward spiral of lesser and lesser economic production and reducing GDP. Now let us look at the unemployment rate. It's difficult to get the latest quarter data, but I think I have found this chart in Statista.com that gives us some latest data for Q3, at least for 3 countries. So I would like to look at that, and that gives us an idea of how strong the employment is across the globe. So here is the chart I was talking about, and if you see here, you have a color coding at the bottom. The blue one is the Eurozone, dark blue is Germany, gray is France, and Japan is red. United Kingdom is green, and United States is yellow. So if you look at the overall employment status, this is all employment status. This means the amount of people who are working. You will see that here we have Q1 of 2023. We have results for only 3 countries out here. And those 3 happen to be Japan, United Kingdom, and United States. They're all at 78.57, 75.88, and 71.79. Now, that doesn't mean that 24% of the people in these countries are unemployed. It can never be 100% because there are people who are not yet of the employment age. There are people who are already retired and out of the employment market. So those are all the things that we have to keep in mind. So 74 and 71 is really high number of employment. And even if you look at how employment was in Q1 2017, you will see that all of these numbers now are relatively at a high level for all those countries. So there's a high level of employment, which means that all these people who are already working are going to be spending money into the economy, and therefore there's going to be a tight labor market where companies are going to be producing more in response to the demand, and they won't have enough people to work, and therefore they would be looking for more people to be employed. And this is a virtuous cycle of increasing consumption, increasing production, increasing inflation. So this has to be broken, and that's the goal of central banks. So you'll see that there is strong employment everywhere, and it has to be turned around. Unfortunately, it may come out, if we were not tactful in talking about this in a proper terminology, it may seem like economists are hell-bent on creating a lot of unemployment in order to salvage the economy. But creating unemployment is a byproduct of the efforts to tame inflation so that everybody can have a good quality of life. So that's the way I think we need to look at it. There are a few more things that are likely to happen as oil prices keep on dropping. The inflation comes down because we need oil in order to transport food from one country to another. We need oil in order to create energy to process the food and transport it to various warehouses and to various stores. So to cut a long story short, as oil feeds into a whole lot of different inflation, and when oil prices go down, you should expect the OPEC to cut production to boost oil prices, and that is likely to make the fight against inflation a bit more difficult. But on the other hand, we are also seeing the anecdotal evidence that cost of freighters and cost of containers are going down. That's a positive indicator that demand is falling and there is a sufficient amount of material everywhere and orders are being reduced. So orders are forward-looking indicators. So if container rates are falling, that means that orders are less and there are more containers available. So that's one positive. But if the oil price were to be hiked through OPEC production cut, that is going to create something good for the environment. Fossil fuel technologies, the transition from fossil fuel technologies to green technologies or non-fossil fuel technologies will get a boost. This means that companies manufacturing batteries and green technology will be in a more competitive landscape, and they will likely capture more of the market. So OPEC might have to think twice before they take the step of cutting oil production. But however, if they went ahead and did that, then expect EV sales to improve, expect people to move to more of renewable energy and away from fossil fuels. So coming back to the overall conclusion, the relentless interest rate hike is going to ultimately push us into a global recession with isolated pockets of sound economic activity. One such geographical area that I have identified is India, because Indian economy is kind of insulated and it's huge. And they are just moving their poor people into middle class, and the per capita income is also getting boosted year after year. That is leading to a lot of wealth creation in India. And I'm already investing more in some of the best stocks in the National Stock Exchange, which is the main stock exchange for India. And if any of you are interested, I would be more than happy to cover how you in North America can take part in whatever growth is happening in India through NASDAQ. So there are various avenues which you can use. So if you guys are interested, just put it in the comment below. But out here in the North America, I think we need to gear up for a difficult winter, while Europe will again face the energy issues as winter approaches if the Russia-Ukraine crisis is not resolved. I think food inflation is also likely to complicate economic prospects, not only due to war, but also due to various countries holding back food products for own population. For example, India has held back rice production export, and it said that it needs to meet domestic demand first before any exports. So those kind of things might happen. So based on all these macros, this is what I think. I think the bright spot seems to be CRISPR and Bluebird, as they are already ready for XSL and lower cell approvals. And health is a fundamental necessity. If you look at Maslow's hierarchy of needs, health comes along with food and clothing and security. And it will not be much affected by recession, especially for severe diseases like SCD and TDT, where there are painful incidents on a regular basis. The other bright spot in genomics sector, I think, is DNA, as they keep on getting new clients and have recently gathered more credibility, in my opinion, with the DARPA contract and also repeat engagement and expansion of engagement by Sumitomo. So I think DNA is a good one. And I also think that PACB is doing very well, and Illumina has got a great potential to turn things around and regain some of its lost value, because it has lost a lot of value recently due to all the Grail-related shenanigans. So I'm hopeful that Illumina would again prove to be a positive factor. And there is a little bit of momentum with Invitae, so that is again that other one which I think is good. We still have to wait for the remaining results to come in. Again, let us remember that the index is being driven by a handful of strong ticker symbols, while the rest of the market is at best flat. So it's a very, very difficult situation right now, and everything depends on inflation coming under control. And towards that end, I think the monetary policy is going to dictate what is going to happen in the next 2 quarters. And there are some countries where monetary policy is at loggerheads with the fiscal policy. Those countries are going to have a tough time. And one of those is Canada, where I live. Our monetary policy is doing all the right things by increasing the interest rate to control inflation. But our federal government has increased the immigration very high, and we have welcomed 1 million immigrants so far, which is almost 10 times more than what we have done in the past. And as a result, food inflation and house inflation in terms of rent and house prices is absolutely high. And also the housing sector is getting a bit precarious because mortgage renewals, which are due anytime now, are going to see people moving out of a fixed rate mortgage, which was probably at 1.79, and getting into a new mortgage, which will be at around 5.75. And many of them may not qualify for a new mortgage for the house that they already have. So we are expecting a wave of foreclosures. But at the same time, we have so many immigrants, and it's not rare to find that. I mean, it's more often than not, you find immigrants renting a 3-bed condo unit and 2 people to a bedroom. Those kind of things are happening where people are sharing their rent. So per head, it may end up being $600 to $900, depending on the people who form the group. And housing is getting precarious, and also we have a lot of panhandling and sleeping in the wild because people are homeless. So things are not looking that great in Canada. Hopefully, we see in the next couple of quarters, US, which is in the best situation globally, might probably lead the rest of the world out of this morass. Here's hoping for the best, and I hope you guys have a great weekend. Thanks and have a great day. Bye for now.